thing. That's where I saw it. Did you also post it in the other one?
Yeah, I posted it and everything.
Okay. Yes. Yeah.
Okay.
You're doing
So
good, man. You're doing really, really good at this. You're
this
getting better every
class,
time. Yeah.
I don't think so. I feel like I was better before.
I think we're all tired, but no, you're. The more you do it, the more it'll just come out without even thinking about it.
Yeah, that's the plan. Got to teach it a bunch, and then listen to everybody's questions, and then maybe just get like really stoned or something, and then just like barely say anything and just say the bare minimum, and just talk really slowly and just answer questions, basically like a professor. A lot of them don't really talk fast, and they just talk really slow to make sure everybody can follow along. But anyway, all right. So I'm recording this again. Okay, now there's the rest of the people are in here again. So we were covering. I forgot the exact question, but we draw trend lines from dips that leads to new highs. So this is a dip that led to new highs. This is a dip that led to new highs. This dip did not lead to new highs, but the trend is based off of these two touches. So you would have taken half out here, and then this dip led to new highs. And so at that point, you can draw this trend line. And then you would have taken another half out here. And so at that point, you have half of a half writing. And then and at that point, this did not lead to new highs. So this is not a trend line here. However, yeah, so that was it. There's no more trend lines worth following. Oh, this is kind of a new high. So I guess you could draw a trend line from here to there. And it just barely broke it. The candle didn't post outside of it though. So you wouldn't necessarily have to close that one. Oh, no, it did, depending on where you draw the line. So yeah, you could close another half right there. You just want to make sure that you're only drawing trend lines from lows that lead to new highs. Oh, I remember the question now. He was asking, where do we take profits? If there's no resistance, where do we take profits? And this is the answer to that. You find lows that lead to new highs and you draw trend lines, and then you piece out as it breaks those trend lines. So this was the first trend line of lows that led to new highs. Technically, this is the first trend line of lows that lead to new highs. So if you, but no candle posted beneath it until here. So you could theoretically take out half there. You don't want to draw trend lines anywhere else. It has to be lows that lead to new highs. You could see a trend line here, and I guess technically that's a higher point, but I'm looking for levels that really break out. So like, see this completely went to new highs. And then from this level, this completely went to new highs. So that's a touch, etc. Just want to make sure that it's going completely to new highs. And again, this is a 5-minute time frame, so it's going to be a little bit more noisy, a little bit harder to determine trends. But so here's a low that completely went to new highs and a low that really went to new highs. So you could connect those lines. And then you would piece out there, and that actually would have been a great exit in hindsight. And then this didn't lead to new highs, so you wouldn't want to connect these right there. And then you can do the same thing on the other side if you're shorting. Say for some reason you were shorting in this zone and you got filled here, you would draw highs that led to new lows. And so here's a high that broke down to new lows. So this would be the start of it. And then it hasn't broken down to new lows since. So that wouldn't be a trend line yet, but maybe on a smaller time frame it has. Yeah, so right here we have a high that went to new lows and then a high that went to new lows. So you could connect these lines. You see, this was the low and it went to new lows. And this is the low and it went to new lows. So you could connect this as a downtrend line. And so if you were shorting, you would want to buy back 50% when it breaks that line. Let's say it does this, boom. As soon as the candle posts outside of that, you would close 50% of your short. And it might come back down, then come back up, and then break down again. And at that point, you have this trend line. And then you would close 50% if it breaks that trend line and then holds above it or whatever. And you would close another 50% right there. And then, it could do this. And at that point, you have another trend line somewhere. I don't even see it, but maybe something like, no, that's not a trend line. That's it. There are no more trend lines. Oh, I guess, yeah, there's not really any other trend lines. So at that point, you maybe just get all the way out. If there's no more trend lines for you to want to close at, that probably means you should be out of it. But you won't be shorting too much. So you don't really have to pay attention to that side of the trade. And maybe when bear season comes, I'll make a whole series of how to short. But for now, it's very foolish. We are in an emerging bull market where new money is entering every day. It's very hard to figure out where resistance will stay and where support won't stack. In a bear market, we can anticipate price coming back down to support. But in this bull market, the price will stop falling at any point. For example, new support for AAV is going to be at new lows. It's going to be beneath this text line. And then it looks like we're stopping already. We're not even going to go to new lows from this one, let alone this one. Looks like we'll probably try to break out, maybe fail, come back up again. And that's not at new lows. This is why we don't short, because the new lows are not anticipatable. That should be a word. So just keep that in mind that, there might be opportunities where we're really close to resistance and really far away from support, but it doesn't mean that it's a short if we're in a bull market. If this thing's been trending up for, months, like literally since basically since its inception, within a month, it started going up. This is the intact uptrend. You guys don't want to be shorting anything in a high time frame intact uptrend because it could catch a higher low at any point. See, like right here, if I told you guys resistance for Aave was in this zone and it looked like this, and I said, all right, guys, the support is right here, and you're thinking, oh man, if only I could short this. Oh, it's coming down, I'm going to short it, and you would have just got squeezed because it didn't even come down to support. It just rocketed again. This is why you don't short in a bull market, because at any point you can end up being part of a new buy zone. You don't want to be squeezed like that. So that's why we don't short in bull markets. And the same thing happened on Bitcoin. Everybody thought Bitcoin was going to crash. I mean, not everybody. Anybody that trusted me didn't think it was going to crash. But like right here, for example, everyone's like, "Oh shit, this was consolidation. We're rejecting it. We're probably going to go to new lows." And so everybody was shorting this, thinking the support was going to be somewhere in this area. Because a lot of people see these bounces and see this as a support range. And it didn't even touch it before it rallied again. Even though this was resistance and rejected the resistance, a lot of people really thought that Bitcoin was going to come back down at a minimum to this level. They were waiting at 3K, and it didn't. It just ran again. So we don't short in bull markets. And your tip that this was not bearish is that it broke this resistance zone. Remember what I said, if the price breaks the zone, don't anticipate similar zones holding true. In this case, there were no more resistances to speak of. But if there was another zone, like say here, which I guess there was, you wouldn't want to anticipate that holding true. If it broke through this one, no sweat. And we can see that it just kept going. So, yep, that concludes how to respect zones. If the price is respecting the greens, it'll probably continue to respect the greens. If the price isn't respecting the reds, it'll probably continue to disrespect the reds. You still want to, if it's a red zone, you still want to anticipate that being resistance. I'm not saying not to anticipate that, but you don't have to panic when it hits it. You could put a stop loss or whatever. Me personally, I see all the opportunities all around, so I'm not sitting here with my perma bull hat on. Oh, we're gonna go through this resistance, no problem. And so I was advising my clients to short in the zone. And I told them that, this zone might break though. So go ahead and short in a little bit deeper. And I don't remember the exact level I gave, but a lot of my pro clients at least were shorting into the steep zone. And it came up, broke this zone and came back down. And I told my clients to go ahead and take profits right here on that short because we broke that zone. Whenever it disrespects the zone, all bets are off. And yes, in this case, it did come way down, but it wasn't worth the risk at that point. It didn't respect the red zone. So at any point, it could have just went up again. The same thing applies if the zone breaks on the buy side. If the zone breaks and goes down, yes, it might recover, it might put you in profit, but you want to take profits early. You want to sell when that breaks. You don't want to have optimism. If it broke the buy zone once, it's probably going to go even lower later. Or if it breaks the sell zone once, it's probably going to go even higher later. Does anybody have any more questions about my zones or how to trade them? Is anybody still here?
Yep.
Yeah, I just got on a little bit late. Is this being recorded?
Yeah, this one's being recorded and the last one's being recorded.
All right, thanks.
I'm still going to do better versions of this. This is probably my #1 video that I'm going to be doing because it relates to the primary tier and their ability to follow my signals, which is, the main reason I get paid the big bucks.
Do you share how you come up with your zones? I can see where we get, resistance and support from, but your zones are pretty damn right on. I don't know if that'll be a later video,
Yeah, how I define my zones is a pro and VIP feature. So if you're pro or VIP, there's instructions in the pro VIP chat on how to chart like I do.
Okay.
The pro tier, they get video lessons that I record for other people, or for the pro tier. And then the VIP tier gets personal sessions with me to figure it out.
All right, I'll go look for those in the pro. That'd be in the pro chat.
Yeah, it's called, let me find the name of this video.
There's also probably a handful of things in the classroom too.
Yeah, the classroom actually, it explains the zones too, which, hopefully I can delete that eventually. But yeah, the classroom has a bunch of zone info. There's no videos on it, but let me find the name of the zone. Yeah, right here. It's called Learning Support Resistance and Risk Rewards. It was posted on January 24th, most recently. That's how you'll find how I zone things.
Okay.
That's kind of confusing. It's kind of hard to learn in 40 minutes, but in 40 minutes of the video, you can see what I mean, and then you can go back on your own time and look at the different charts and see how they played out. When I taught myself the zones, I literally spent hundreds of hours backtesting them before I learned to believe in them myself. I was in disbelief. I was like, what? This pattern's been staring me in the face for, X amount of years, and I never noticed it. But yeah, so I was going through markets going back to the 90s. I was backtesting these zones left and right, trying to make sure that I could rely on them. And it was just amazing how reliable they were on any kind of market. It's crazy. The higher the time frame, the more accurate they were. These zones even predicted the support for the Great Depression. They even predicted the crash for the Great Depression, which I found just fascinating. That was in 1930, and in 1929 or something like that. So, yep. Okay. So at this point, Bitcoin is not respecting resistance zones. It tried to here, and then it did here, and then it barely fell into this buy zone that I gave you guys, and just rocketed. Which I told you guys there was no resistance left once this zone was hit, and it hit it and left it. I was telling everybody in every chat room, no resistance left on Bitcoin. Buy more the lower it goes. And then that one dude shorted Bitcoin somewhere around here. Woke up like a $4,000 loss. But yeah, so that concludes the zones. I want you guys to understand them because that's pretty much what the primary tier is paying for, other than the chat, the nice chat rooms is my signals and my charts. And so I want you guys to be able to trade based on them. Just in the past, three days, I gave 50 plus different charts, and all the ones I looked at held true. There weren't even signals. It was like I posted in the primary chat and in the public chat. It was like a whole handful. It was like 20 plus different stuff, and they all hit the buy zones and then left. There's even when I'm not making signals, you can check my charts and see where the buy zones are and find some good setups on your own, so long as the sell zone is far enough away. What were you gonna ask?
Yeah, about volume profiles. So earlier on the other session, you mentioned that there was a bearish volume, bullish volume profile. Is there? I mean, anything that we can that you can tell us about that, so we can
Yeah.
trade better?
Yeah, that's another video that I've already made for the pro tier, I
sorry.
think, but yeah, I know you don't have access to that. So it's pretty simple. If you don't have TradingView, you're not TradingView Premium, you're not going to be able to see the volume profile. I think Trading Light, Tensor Charts, and Exo Charts, they have free volume profiles. Let me see. Yeah, so these are volume profiles. And so right here, we can see we're slightly bearish. And then even this is slightly, you guys can see my screen, right?
Yeah.
And so this is slightly bearish, and this is slightly bullish, but this is really bullish, and this is bullish, and this is bullish. You can see if it slants upwards and it's a very defined slant, that it's bullish. And if it slants downwards and it's a pretty defined slant, that's going to be bearish. So in this pattern, the bears are a little bit more defined than the bulls. The bulls are kind of a little bit more scattered there. Here, the bulls are a little bit more defined. And then here, it looks a little bit more scattered, which is a slight bearish bias, in my opinion. And then I think Trading Light also has a volume profile included in it, if I recall correctly. The Trading Light has a free tier. Yeah, see, there's a volume profile right here for Trading Light. So there's various free ways to view the volume profile. I still prefer the TradingView volume profile. So again, so on the 6 hour, this whole thing is bearish. The real bullishness is right here, below 31. Granted, there's a buy zone here and a buy zone here. But if you beneath these two buy zones, it's very bullish. And just a bunch of scattered nodes. And then you could look at these nodes as kind of a bearish thing too. A smaller node, bigger node, bigger node. But typically when it's not spread out, they're more likely accumulation nodes, especially if it's in an uptrend. So they buy a bunch at this level. Then when it holds at the next level, they buy a bunch, gap it up, buy a bunch, gap it up. And then at this point, it was distribution for a while, and now that distribution is being canceled. This is a nice little downtrend that was, depending on where you draw the lines, that was, not really, never mind. It wasn't exactly the best downtrend. But yeah, right there, connecting these two fractals, played right off of that line. And that was your first tip off. And at that point, you have a new trend line, because you have a low that went to new high and a low that went to new high, and then it caught right on it. Not that you want to trade based on these, but it's a good idea of figuring out sentiment. Yeah, and so we're still bearish here. And then here, from 42.5 to 43.9, there's way more buy volume than sell volume. Even though the buy volume is a little bearish right here, there's way more buy volume. And you can see there's a gap right here. Anytime you see a gap in volume and it's in an uptrend, that's institutional demand, especially the first half. So you could draw a line in between the half of the gap, and you can guarantee that at least the first half of that is going to want to be supported because they gapped it up. Anytime they're gapping up, they're buying everything in sight and everything on the books, just bought it all. And anytime they're buying that confidently, they're going to support at least the first 50% of it. And then usually they're only supporting the first half, and then other people see that gap and they make the second half happen. And so the second half, may actually not hold as support, but the bottom half typically will. And then also, like I said, this is going to be the gold zone demand right here now, down there. So if the price can come back down here, I'll make a gold signal on it, because it just rallied so hard from this dip that this will definitely be reliable, at least for one bounce. It might not lead us to new highs, but it could come back down and then rally and then maybe stop somewhere where the idiots bought and then come back down. But at that point, that's still $3,000. It's a decent ride. So it's worth signaling on when the time comes. I'll go ahead and put a signal right here in front of you guys. That alert. Now that I'll put it in the primary chat when the time comes. I can even move it to give you guys a little bit more advanced notice. Yeah, just make sure you guys take profits early, whenever possible, unless you're averaging in still. So if you have a majority of your orders still waiting, you don't necessarily have to take profits early because you're just going to get a better average price. Another thing I could cover before I end this respecting zones talk is if the zone is this size and the price, I'm going to give several examples, and the price comes down to here and then wicks out of it, I would consider this zone entirely valid from any new level lower. If the price comes down to here, like say a third or more, and then leaves, at that point, I'm not sure I would trust this zone anymore at all. It still can, but again, you would want to buy anything lower. If the price comes down more than halfway and then tries to come up, I would definitely not count on the zone anymore. Now, I'm not saying it won't bounce from anything lower, but at that point, I personally would not anticipate as good of a reaction as you saw for the first half. If the price goes all the way through, obviously, there's no more spots left to buy. You would not want to anticipate this zone holding true at all anymore. However, there's not really however, it's actually furthermore, if it comes into this zone, leaves, and then has to come back in and gets a lower point and then tries to leave and fails again, this is really bad. If it's going through half of the zone and not leaving, not even the first time around, like I wouldn't like see if, you know, the dip was here. This didn't even get back up to here before it went down again. So this is what I would call a bad reaction to the buy zone. We want to see the buy zone cause a spring, and then we want to see it get higher lows at a minimum. Ideally, the spring would do this and just take off like that. That's how you know anything lower is still good. If you see this V reversal and then go to new highs, oh shit, my other laptop just died. That's when you would want to anticipate anything lower holding true. So long as there's an actual V reversal, you can anticipate anything lower still holding true. But if it doesn't give a good enough reaction and it tries to leave and fails and comes down, tries to leave and this is not a good reaction. I'm not saying it won't eventually rally still, but it's not going to have that upside potential that you want in a buy zone to have. And the opposite holds true to resistance zones. You know, if this was a resistance zone that you wanted to take profits in, and you woke up and the price came up, and I'm sorry, you woke up and it was like this. At that point, you can see the resistance zone isn't as strong as it could have, because it left and then immediately came back in it. So obviously, this zone is not as strong as it could be. You know, if you woke up and the price did this, and then this, that means that was a very strong zone. Then anything higher can still be new resistance. It could just reject harder when the time comes. But you want to make sure that it leaves the zone and doesn't want to come back into it for it to be a strong zone. So if there's a resistance zone and it just does this, that's not a resistance zone. It stopped being a resistance zone when it went to a new high for the third time. 1, 2, 3. At that point, it's just going right through it like butter. I mean, not like butter, but you know, like bread. This would, if it was going through like butter, it would just cut through it like it didn't exist. And you know, that sometimes happens in bull markets. In bear markets, it might cut through the buy zone like it didn't exist. But in bull markets, I personally, I don't get all the way out in a red zone unless I just have a really bearish bias towards it, like, you know, Doge or XRP or something like that. I wait for the reversal confirmation. So we have 1 red, 2 reds, and it start on the 3rd candle. That's where I would just go ahead and get out once it confirms reversal. And then if it comes back in, I wouldn't buy it. We're still in a red zone, but you know, if it comes back out, comes to new lows, you know, and then you can start averaging in for those levels if their support is near enough down here. You just want to have a little bit of critical thinking when you're trading these zones. They're not foolproof, but they're great odds enhancers. You just want to make sure that you're gauging the reaction to these zones appropriately. So if it hits it and leaves, that's a good zone, and that's still going to be strong resistance above it. But if it doesn't hit it and leave, and it just kind of wants to try to leave and doesn't, that's very weak. And at that point, you could just draw a trend line in that zone and get out if it breaks it, or at least get out some if it breaks it. So if you have a reason to think it's going to go down, by all means, draw a trend line and start getting out when it breaks the trend line. But if it's not just reversing immediately in that zone clearly is not as strong as it could have been in either direction, whether it be a buy zone or a sell zone. If it doesn't react to it violently, then that zone is not as strong as it could be. All right, so any more questions before we wrap up respecting zones? Okay, well, the volume profile is slightly bearish, but with more bullishness happening. The blue is the buys. So at this level right here anyway, it did have a bearish volume profile, but now there's no sells. There's not any sells happening here. From 45 to 47, nobody's stupid enough to sell it. And compared to the buys, I'm sure somebody's selling it. Yeah, it's a tiny buy sells in comparison. So in my opinion, this bull flag is confirmed breaking out. Let's go ahead and show that on the smaller time frame. Yeah, so here the sells, you know, they were kind of aggressive, but they're pretty much just giving up now. There's way less sells than buys in comparison. And now we have more, these are basically bullish volume nodes at this point. So it's a good thing. The only thing that could be better is if we were putting on more volume, the higher it goes, which, you know, might happen. The next node might be here and the next node might be there. That'd be awesome. That means we're well on our way to 60K. And that's what we're waiting for. Okay. Well, I don't really know what else to cover on zones. Like I said, I'm still going to make several more videos on this as I figure out how to what I can do is I'll write a list of things to cover, and that'll be a lot easier for me to make it concise and short and sweet. And you guys will all get a copy of that. Until then, you're just going to have to learn from this lengthy video.
Yeah, thanks.
Okay. Well, that's all I really wanted to cover today, unless you guys have something else you want me to cover. I'll end with the tip of the longer a price spends at a zone, the weaker that zone will be. So you see this single red candle right there, and then we had more up. That's going to be a strong support zone. You see all these red candles, and we were here for how long? All morning. We were here for 4 hours compared to this 1 hour or this 15 minutes. This is going to be a stronger zone. So I would mark this area green, simply put, because it tried to dip and failed. You can learn that in the classroom. And I'd mark this area yellow because it spent more time there. All the idiots, well, I shouldn't call them idiots, all the conventional technical analysts see this as the strongest support. They see this as consolidation. Go ahead and put a stop loss right underneath this consolidation level, which is just stupid because I just told you guys this is a gap and that's where they're going to want to support the price. So why would you stop loss into the gap right where it's likely to bounce? But you know, that's what people do. They see consolidation as support and they sell if it breaks it. The true support's going to be here. That's just my 2 cents. This is according to the 15-minute time frame, and you know, 15-minute time frame will let you down. But 6 hour time frame, this is a pretty decent zone compared to all of this where it spent a lot of time. This isn't support. That is not support, guys. This is at best yellow. In my opinion, it's not even yellow. I would put the yellow like right here, and then still it could cut through that like butter if it wanted to. I doubt it will because we have freaking Elon Musk that bought like $1.5 billion Bitcoin in a day. But but other than that, they people think this is going to be support and it won't be. Everybody and their mom has stop losses right here. And it's just going to bounce right underneath it and run again. I bet you anything. You know, before we broke out, I thought the support would come beneath this. I wasn't sure that it was going to, how low it was going to go. I just knew that the good support would be beneath this. But now that we broke out, now we're likely to just reject anything beneath this. And so at this point, if you guys wanted to be really safe, you could average in from this large node right here, and your buy zones would look something like that. You'd dollar cost average into these zones, and you'd be lucky to get filled at any of these levels. Whatever happens, it's just gonna rocket right back up afterwards. You'll see. I know it might be hard to believe, but you'll see eventually. But I don't know if my bias kind of says we'll never see those levels again. I mean, heck, I'm not going to tell you guys it won't happen, but my bias says it won't happen. And if it does happen, it'll be after this trend breaks. So it's basically never going to happen unless this trend breaks. This is the best way to describe it. But I hope this trend at least breaks a little, so we can get filled in this zone down here that I'm going to signal to you guys. Because if it doesn't break, then we're not going to get filled at all. But yeah, this line's going to have to break before we get down here. And it just doesn't look like it wants to. We have a dip that led to new highs and a dip that led to new highs. So this is going to be a strong zone, a strong trend line that it's going to be hard to break. And you'd be pretty foolish to suppress this price or try to scare price down, because it costs a lot of money to send a price down. So unless you have enough money to send it down even lower to scare the whales, which would be down in this levels, you're just wasting your money. You're losing dominance for no reason. And I don't think, since this, in the new catalyst with Elon Musk, and he's just going to be the first billionaire. There's going to be plenty of people that follow suit now that want to buy into Bitcoin with hundreds of millions and even billions of dollars. So I don't really see this happening, but maybe I'm wrong. Maybe somebody has more dominance than I thought, and they'll be able to scare the price down. But I'm not going to count on it. I have big buys waiting here in this level, on the off chance that we can get back down to it. The FOMO line was right here on the smaller time frame. The trend line I gave, I said around 44K. I think I said 43.7 or 44.4 was the line I gave in the public Bitcoin channel. Somewhere around there. So the fact that we got above it and now we're rallying again, FOMO's in full effect. We're just going to keep going. Maybe we'll come back down and rally again. But this flag is playing out, guys. Anything below this level is going to be really good support now. That's how bull flags work. Everybody's trying to buy the tip of the bull flag, and they're selling at the base of the bull flag. That's where the good support is. Don't sell into support. The time to sell is above the flag. Don't sell beneath this line. I mean, I wouldn't sell at all, but I mean, if you're scalping or something, I understand selling at these levels. But don't sell below 42.7, guys. You're gonna cry if you sell anywhere in this area. But if it does break this level, we can see some decent down. I'm not saying to buy or sell if it does that, but if it does break this trend, we could see some decent down. If it breaks this trend, it'll probably break this whole trend. And so who knows where it'll actually stop. All right, so this was 75 minutes of free primary lessons. If you guys have any more questions to cover in the next 5 minutes, I'm happy to answer them. Mike? Oh, Mike left. Oh, no, he's still here.
No, I'm here. I was just on mute, and then I was thinking.
Okay. Ricky or Wesley or anyone? John?
I was going to say, I can help you edit that video when the time comes if you want to make something.
Yeah, if you want to take the video and crop it out, that'd be awesome. Do like a highlight reel of the past 80 minutes. It's going to be like 6 minutes long. That'd be awesome.
Yeah,
You're more than welcome. Get some bonus points. Anybody that wants to edit any of my videos, you're more than welcome. Any of the public ones are going to, any of the primary ones are going to be, saved for you guys to download or edit or, whatever.
I want to ask you, do you see any altcoins what do you see the altcoins doing then with Bitcoin doing this, going down, huh?
No, I think altcoins are going to be forced to reaccumulate, at least the high volume ones. It was too unsafe because we were at a pivot point for the past 40 days. for me to want to call out buys at them, even though they were likely to continue up. It just had too much risk, not enough reward. But now, now that we're rallying on Bitcoin, the high volume altcoins should follow suit. But we want to wait for the breakouts to happen before we buy the dip. So for example, I'll just pull out ADA, for example. I don't know. I don't have any of these charts memorized. But so this was a flag that didn't break out hard enough and dipped. Remember, people stay on the bottom of the flag. Look what happened. You would have cried. So here's a flag. One, that's the flag. And we broke out and we ran again. So now this is going to be a gold level buy. So that's where we're going to be trying to buy with the gold signals. You know, we could just start averaging in the lower it goes into that bull flag. And, you know, in any coin, any high volume coin that's in a bull flag, you're going to want to buy anything lower than it officially. So, you know, here's a bull flag. You're going to buy anything lower than it. You can name any coin here. I have a whole list of them. Anchor, not a good enough bull flag. SKM, that's a straight up bull flag. Remember I said buy the breakdown of sideways in an uptrend. So this is already a decent entry. It will just become more and more of a decent entry, and then we'll run again. See bullish volume profile. Here's a flag. Once we break out, then buy anything lower than the original flag was. This is a flag. We broke down. You're going to buy anything lower than the original flag was. So this is all decent buys. This is a breakout of a flag. So you're going to buy anything lower. These are all decent buys in these areas now. That's why I posted a bunch of gold signals yesterday, because as we were breaking out, I knew that these were going to be stronger supports.
Yeah, I noticed a lot. I guess I'm learning. I noticed a lot of altcoins. You know, I couldn't name any. That's been looking it's almost identical patterns on a lot of them.
Yeah,
kind of like what you're showing. One bull flag after another. Not all of them, but a lot.
Just anytime you see a bull flag break out and run the same length, the first bull flag is going to be solid. So all these are going to be nice buy zones for us now. These lines that I'm drawing. This is a flag and then broke out again. So that'll be a nice buy zone.
Down here.
I'm using red lines. I should be using green, so it's not confusing. But yeah. So this broke out. So anything lower than this is going to be great. And this is sideways in an uptrend. There's a buy zone. Anything lower is going to be good. It's weak. And here's a breakout again. Buy anything lower. Remember, anytime a rally happens, you can buy lower points. This is a rally, buy lower points in the rally. It might not ever happen, but if it does, you'll want to buy them. That's the total too. You obviously can't trade the market cap. But, yeah, so here again, that bull flag played out. You could buy anything beneath this. It never happened. And then that bull flag played out. You buy anything beneath that. It might not ever happen, but if it does, it's a good entry. Here's another good one. This was a bull flag that just turned into another bull flag. So, you know, buy anything beneath the first bull flag. They're all around us. I have a meme for it. Bull flags everywhere. And another bull flag. Just buy beneath them. You guys might think, you know, it'll never come down to earth. But, you know, we'll have one red day after 20 green days, and that'll be the day where we pick up a bunch of stuff. And they're just waiting for those days. Otherwise, you just hodl and buy the dips, the tiny dips. You know, we might dip like that and might come back down. You can buy a little bit there.